Are you wasting money on renovations that don't raise your rent? Most landlords spend cash on upgrades that never pay off, but I'll show you the exact ones that do. Let me walk you through the smart, high ROI renovations that make your rentals more profitable. Well, welcome to Strategy Saturday. I'm Charles Krill, and today we're discussing high return on investment renovations. I'm going to lay out some tips for increasing rent, reducing downtime, and making every renovation dollar work harder for you. So let's get started. The rental property investing business revolves around boosting the net operating income, the NOI, which is primarily achieved by increasing rents while minimizing vacancies and unit downtimes. Now, we have a primary formula for determining how much to renovate based on the 36 to 48 month payback period. In other words, can you recoup your investment within 48 months? Better yet, 36 months. And this is key to understanding how much you can invest into a unit. Now, you can use this calculation before buying a property or with a property you already own. Start by checking out the competition in your local area, including properties of similar sizes and vintages, and review the condition of these properties and their asking rents. Now, compare those findings to the subject property and begin calculating the renovations that can be performed and their impact on your rental rate. Now, I was once asked why we won't opt for a longer payback time frame, and the answer is simple, and it's that renovating units involves a high amount of risk, especially if the level of renovation is not currently present at your property. You aren't entirely sure if you can truly achieve the rents that you are estimating. Additionally, you're taking a unit offline, and every day that is being renovated, it is not generating any income. Think of going into an apartment complex that has all white or black appliances with laminate countertops and going in and saying, we're going to put stainless steel appliances in, we're going to put granite countertops in, and not knowing if that investment you're putting in there is actually going to pay back. You might know that the property next door or across the street or down the street, it has those upgrades done and is achieving higher rents, but you're not 100% sure for your unit. It's different if you had, 5 or 10% of your building that already had these upgrades and you are renting them pretty quickly. It's a different story if you have 0 of these renovations done and you're putting out these thousands of dollars, sometimes tens of thousands of dollars into units, and you're not 100% sure if they're going to pay back. So we want to make sure that we're going to get high returns on this money that we're investing into the property. So let's review some high ROI renovations. Now, starting with lower price points, these options would include kitchen backsplashes, nicer countertops, removing the plastic bathtub shower insert and installing tile from the tub all the way to the ceiling. Another thing that we've tested at one property is adding feature walls with a different color and pattern, and a feature wall might not result in higher rent by itself, but coupled with other minor renovations, it will help rent the unit faster, which is the same difference at the end. We want to keep tenants in there longer. We want to rent the units faster, keep that downtime as short as possible. Now, other minor renovations that you can use would be like replacing the bathroom vanity, which is usually inexpensive and transforms the bathroom. Years back, my brother and I would purchase a half dozen vanities at a time when they were on sale, and we would install them as we turn units. Another high ROI upgrade is adding a stackable washer and dryer combo. Typically, the payback period for this upgrade is less than 24 months. Now, if you want to learn more about the value of minor renovations, please check out episode SS219. That's SS219. So once you start increasing your budget, ensure that your adding funds are mainly allocated to the kitchen and the bathrooms. When we walk through units during the due diligence period, we immediately check the condition of the cabinets, or more importantly, the cabinet boxes, and you will dramatically increase your ROI if you can avoid replacing the cabinet boxes and instead focus your money on the countertops and new cabinet doors and hardware. Now, as your budget increases, or if you keep the current cabinet boxes, you can use some of those save funds on flooring and lighting. Now, bedrooms are really floors, paint, and a window, but the kitchen and bathrooms are where you can achieve meaningful rent increases. Now, I would always avoid heavy renovations unless you or your partner has extensive experience renovating properties. Now, my first property was over my head. I didn't do another renovation of that magnitude for a few more years, and major renovations are full-time projects to manage, and you need solid relationships relationships with good contractors to complete them. You want to make sure that they're not going to, walk off with your money and your deposit, but also that they're showing up every day, because you have to minimize that downtime of those units. So when you put money in, you're getting it back as fast as possible. And when you're performing upgrades and renovations, focus on increasing the durability and minimizing future maintenance costs and headaches. And during renovations, anybody that's ever gone through one, your contractor often asks you what you want to do to handle unforeseen issues that they didn't know were there, right? And there's always a cheaper, less thorough method and a more comprehensive approach that will minimize future maintenance. Investing time and money to correct future problems as they are uncovered will yield future dividends in the form of reduced costs and happier tenants. So I hope you enjoyed. Please remember to rate, review, subscribe, submit comments and potential show topics at globalinvestorspodcast.com. If you're interested in actively investing in real estate, please check out our courses and mentoring programs at syndicationsuperstars.com. That is syndicationsuperstars.com. Look forward to 2 more episodes next week. See you then.
If you always want to invest in real estate, but didn't have the time, didn't know where to find the deals, couldn't get the funding, and didn't want tenants calling you? Since 2006, I've been buying income-producing properties in great locations that provide us with consistent passive income while we wait for appreciation in the future and take advantage of tax laws while we're waiting. And unlike your financial advisor, we invest alongside our investors in every property we purchase. Check out investwithharborside.com. If you like the idea of investing in real estate, if you like the idea of passive income, partner with us at investwithharborside.com. That's investwithharborside.com.
This episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.